Hey, how's it going? Welcome back. My name is Alexander, and you're watching The Conservative Investor, where I'll show you how to invest your money and grow your money in the stock market conservatively and safely. It takes a lot of research, but it can be done. I am not a professional financial advisor. If you need professional financial advice, please seek a professional financial advisor. This is just my opinion. Now, if you didn't see my last video, there's been a bit of a gap since my last video. But a lot of good research in there. I put it out at like 1 in the morning. 1 in the morning, so you may have missed it from midnight or 1. A lot of good research in there, definitely check it out. Now, been a big gap since the last video, gaps in the market. We're going to be talking about some gaps closing in the market with Celsius brands. Like we predicted, it closed. Look at the technicals for that and how you can make those predictions on your own. I was on vacation for the last week. Sorry about that. That's why we didn't have a video. I was in Tucson, Arizona, doing a little flight there over the Rockies into the desert. And while I was in the airport in Denver, I did notice that they had Celsius. They also had a lot of other energy drinks. They had C4, Ghost. They had Bloom. Now, I'm not as concerned about Ghost and C4 being competitors for Celsius because I think they form a different niche. It's a different niche. Like C4, Ghost, companies like Rain, Bang. Those are for the young kids who haven't felt that mortality yet, like I'm feeling right now. And then I think, Celsius, Bloom, Bear Bells, protein soda, things like that are more for folks starting to come in their 30s and up, or feeling their age, but still want to go to the gym and be in shape, but just do it a little healthier. I think Celsius has another added advantage for being a niche, for having a niche, that they're a great mixer. I think Celsius makes a great mixer. So the ones I'm worried about, if I'm worried about anybody, is maybe Bloom. They got billboards up there, they're in the same shelf right there next to Celsius and Alani Nu and all those guys. But like I said, Celsius gap closed. They were at, take a look at this chart here. So the gap formed in the high 50s, dropped way down into the 40s. And then we had one golden cross where the 10-day moving average, the purple line, breached up through the green. I think that's the 20. And then both the blue, and then both the 10-day and the 20-day, the purple and the green, passed up through the 50-day and the 200, through the blue and the red. So we had 3 different golden crosses. And that's a good indicator for that's going to close the gap. So we had golden crosses. It's popular out there in the market. Theo Von still likes it. You see Theo Von in maybe a week or 2 ago, had another video, and that exact Celsius that's on his desk selling out right there at the HEB. It's not for nothing. So follow your technicals, follow your real world research, and follow the company's strength, and you'll see if that gap's going to close or not. And speaking of the company's strength, so this is something else to look at, is earnings reports. So this earnings report came out, this is for quarter 3 of 2025, back in November actually. And Celsius Brands now has 20% of the US energy drink market. That's a big deal. Almost a quarter of all energy drinks in the US is now Celsius or Celsius Brands. And Celsius now, it doesn't just have Alani Nu now. It also got Rockstar energy drink. So they're eating them up. So like I was saying, it's like I'm always looking at the competition because look at these shelves. You got a lot of stuff. You got Bang, you got Rain, which by the way is one company, that's Monster. So Monster, Bang, and Rain, it's all Monster, Bangarang, that's all Monster. You got Rise, Zoa, you got the Bear Bells, soda, you got a lot of healthy options. But it's a tough market, and they come and they go. It's cutthroat. But I'm gonna go off these numbers here, That's a more than 30%, I think, increase in revenue year over year, 70%, over 100% doubling of the gains in revenue from Alani for that new company they brought in. 70% gains on, what else we got here? 70% gains on revenue on sales in North America. More than 75%. Yeah, 75% revenue overall, 70% North America, 30% gains for the international market, 49% increase in net income. That's a strong balance sheet, my brother. So even amongst all this cutthroat competition, they're doing well. That's what I like to see. And then their next earnings report. So you see now they got Rockstar, Celsius, and Alani Nu coming up hopefully sometime in February. This brings up an interesting point, and another big part of the research, earnings reports. That's some of my stock portfolio there. But you see all those blue E's? So those E's stand for earnings. You click on one of those E's, and it'll show you this. So coming up, Q4 2025 earnings. Supposed to come out on the 30th of January, so put that on your calendar. Consensus, as in they're expecting an 11 cents increase on their earnings, and looks like they beat them. This is not for Celsius, by the way. It's for a different company. I think this is for SoFi, and they beat them each time so far. So what you want to look out for is when the Celsius earnings comes in. First of all, they're going to post. They're going to say what their consensus estimate is of what it's going to be. If they don't match it, if they're under it, or they just match it, stock's going to go down. If it's above, it's going to freaking shoot up. But honestly, this is where it comes in. If it's a strong company and it's doing well, this is just another good opportunity to buy. Because if it's a little bit under their estimate, or it just matches the estimate, the stock price will take a lot harder than it should. Just buy it up, and it'll come back up. And if it overshoots it by a lot, it might be overinflated, and then it'll come down. Just wait for it to come back down. You can buy more when it comes back down again. But these earnings reports, definitely put them on your calendar, because even if it's not for a buying opportunity, this is very important to keep up with how your company is doing. This is your company. You own a stake in it. You know, you've got your skin in their game. So you want to keep up to date with how they're doing, if they're succeeding or not. Now, next thing I want to talk about here is silver. So we're actually going to open up the newspaper real quick. This is from last week, the 21st or 22nd, a few days ago. Gold and silver surging because of European tariff fears, and also because of Greenland. Well, Greenland and EU tariff things, it's the same thing. Basically, Trump threatened tariffs on nations that were going to oppose him taking Greenland. And that created a nice little dip, nice little buying opportunity. Did you buy? But I didn't have any money, so I couldn't buy. I got to save up for a freaking car. But so silver and gold have been on a tear. Recently, there's a lot of factors involved. It's not just because of EU tariffs and overall economic worries, although people will buy gold and silver as a hedge against inflation and a hedge against economic concerns. The biggest reason why silver was up so high, and gold to a lesser extent as well, is the tech sector. We've talking about before how gold, silver, copper, all that is involved in AI and tech. Copper more in the energy transmission for the data centers to make the AI models run. Silver and gold in the in the processors and making the chips and everything around the chips and the GPUs or CPUs, whatever it is, and technology in general. And another macro factor was China putting restrictions on silver exports. Now, here's the deal. This is why we do our freaking research, guys. That was basically fear-mongering. That was kind of a gotcha moment. Because if you do some more in-depth research on that, there's no actual restrictions on silver right now. What China actually did was update their licensing policy to say that they were only going to allow exports of silver from Chinese companies, exporting at least, I think, 80 tons of silver, and with credit lines of about $30 million at least, 30 million yen or whatever their currency is. That's not a restriction. By the way, 80 tons is nothing. 30 million is nothing. They're just solidifying their controls on the silver market. So what that means for us is that huge silver boom. We had like 20% gains, 40% gains in like a month from a couple of these companies. What that means is there's no founding in this rise for the most part. Well, some of it. I mean, there is demand from tech, but the China thing that scared it up that high, it's BS. So keep your eye on the company with the highest PE ratio. I think it's AG. It might be Hecla. It's between AG and Hecla mining company. And whichever one of those has the highest price to earnings ratio, which one of those is the most over inflated, is probably going to pop first, and then they'll dip, and then you can buy it at a more realistic price. Because this silver is still going to be valuable, but not that valuable. So just a little more insight into the market and making sure you keep up with the news and look a little deeper into the news, because it's not about the hype, it's about the reality of it. Now, the next thing we're going to look at here today, Chevron, daunted by Venezuela risks. So Trump took Venezuela, controlling the oil exports. What they're really doing is seizing tankers that come from Venezuela and taking the oil and sending them to Gulf Coast refineries, which is sick. Now, some people have been saying that, well, Venezuelan oil is crap. You don't want it. You know, it's heavy sour oil, as opposed to light sweet oil, which is going to be the easiest and cheapest to refine. However, Gulf Coast refineries in the US are basically designed for that kind of heavy sour oil. They were getting a lot of that oil, I think, in the 70s. So Chevron being daunted by Venezuela risks, that has more to do with political issues, instability in the country, you know, exactly how much control does Trump and the US government exert now over the nation and their oil. That's the issue. If the oil can come out and go to American refineries, I think we already did get 1 or 2 tankers for American refineries, and that's great. And that's great for the economy at large. You know, more oil means more fuel, more plastics, more gasoline, more things to make the economy run faster and cheaper. But if you want, you could also invest in some of the Gulf Coast refineries. Chevron, ExxonMobil, Valero, and they will benefit from that heavy sour oil. Now, if we look a little bit deeper into the paper, so yeah, tariff turmoil returns rattling the markets. Great opportunity. I love Trump because he scares the crap out of investors. He shouldn't scare the crap out of you because you know better, right? But yeah, Trump is great because he scares people and then they sell and the stock market tanks and then we buy. So forget it. Don't worry about it. The economy's still going to go. It's still going to go. The market's still going to go. Don't worry about it. United Airlines expecting some increases. That's great. Macro conditions. Anthropic is doing well. So AI is doing well. Air travel is doing well. I own some Boeing, so that's nice. Let's go down a little bit here. What else we got? Supreme Court saying it's probably going to strike down a Hawaii ban on guns carried in locations frequented by the public. It's one of the top ones there. Oh, I invest in Smith & Wesson, SWBI. I invest in Smith & Wesson, so that's great for Smith & Wesson. It's like 10 something a share right now. Gun regulations loosening up a little bit. Again, you don't have to. That's a moral issue for you. It's no big deal. But that's why we look, regulations on guns and things like that. I have a lot of SWBI, Smith & Wesson as well, because it pays out a big dividend. Dividend being that Smith & Wesson pays its shareholders just for holding the stock. If you just own the stock, they'll give you money. Like 4% or something. So that's pretty dang good. Let's see what else we got in the paper. Okay, United Profits gets a boost from premium seating. So this is good and bad. I mean, it's interesting. So basically the rift, we're experiencing the beginning of a socioeconomic rift in the US. Well, it's been going on for a while. The rich getting richer, the poor getting poorer. Something that's been happening in America for a while now. But it's accelerating, partially because of AI and tech. Because, and actually let's go down here. There's another article right here. AI CEO warning of inequality. So basically you have people in Silicon Valley getting laid off because AI is taking some of their jobs. But basically, going back to the big picture, AI is making the rich richer and the poor poorer. Increased technology is now it's not making everyone's lives better, it's making rich people richer and poor people poor. Because basically, if you already have a business, if you already have a company, you can just lay off all your lazy high school kids who don't do any work anyway. Get your act together, kids. And you can get an AI software like Claude, which is making a killing right now. It's that's Anthropic, yeah, Claude. They can just get Claude and fire all those kids, and they'll make more money cheaper. So if you already have a business, if you're already up in the game, you're doing great. If you're on the bottom, it's going to get harder. But this is part of what this is. Adapt or die. You got to learn how to work with the system. Invest your money. Get on the side of the winning team. Take a look at the energy drink sector. If Celsius goes down, because it's very overbought right now, you might want to hop on the bandwagon. They're still growing fast. They're doing nice and well. Take a look at your earnings reports. Always keep up to date with earnings reports. See when the last one was. See when the next one is. So Venezuelan crude might be coming to the U.S. And keep your eye on heavy metals. Silver and gold's been on a tear. Copper for me has been on a tear. It's been great. Aluminum too. That's just an economic industrial thing as well. That's about it. I'm dead. Y'all have a great day.